In this video, I'm going to teach you how to trade crypto futures from start to finish on Bybit. We're going to go through how to navigate Bybit as a trading system, how to enter into trades and get our risk management on point when trading on leverage, looking at how to set your leverage ratios, how to enter stop losses and take profits when you trade as well, and then how to manage our positions. This is your complete guide, so check the timestamps in the description to get to the section that you want. Also, the link to Bybit is down in the description. If you don't have an account yet, just go down there, click that, go through, sign up, and then you can follow along with me. They usually have some sort of sign up bonus or deposit bonus as well, which you can see when you click that link to see what you can get at the time. All you need is an email. You don't need any KYC for now. Let's come over to Bybit then, and on the main page, I think you just click Start Trading Now and it will take you through to signing up for an account. Like I said, you only need an email. This will be the dashboard that you come to. Now, I have a beginner's guide for Bybit, so you can go and watch that if you really want to know how to set up your account and everything. But really, we're going to focus on actually trading futures and how I would go about that. So the first thing we really need to do is make sure that you get some money in your derivatives account. So you can obviously deposit and then transfer any cryptocurrencies over from your spot account, which is, the cash settled account, over into your derivatives account. So you'll need something in here to start trading. Then we can actually go on and get into the futures screen. So you come up to derivatives and there are a few different options. I'm just going to click into the derivative screen to actually get these options up for us. So when you're in the screen, you can choose from the options up here. So what we have now is the Bitcoin US dollar tether perpetual market. So the vast majority of cryptocurrencies on Bybit trade against US dollar tether or just simply US dollar. So what we can see here is just searching them. So they're actually adding a lot of cryptocurrencies over time, but you can see we've got ETH right here. And you can just search for other ones like ADA. We have an ADA market. We're going to stick to Bitcoin. So really what I want to go through is the different types of cryptocurrencies. So there's a few different ones. Whatever your market is, there's a few ways to trade it. The first is a USDT perpetual. This means that the future that you're trading or the leverage product that you're trading is perpetual rather than having an expiry date. So futures are very different to the spot market in that what we're actually doing here is trading a contract. And so that contract can either have an expiry date or not. Obviously, perpetual means that there's no expiry date. And so we're not trading for a certain time in the future. We're just taking a bet either one way or the other, long or short. And the future that we're trading will have no expiry date. USDT perpetual means that the asset that we're using to fund our futures contracts and our leverage is US dollar tether. So that's really important. So most people will use a stable coin like US dollar tether to fund their futures bets because it's stable and you're using it as collateral. So you need some money on account to actually fund all of your positions. Most people use US dollar or US dollar tether because they know that the value of that isn't going to be changing every second, unlike a cryptocurrency. But you can do that. You can come to inverse perpetual, and this is actually using cryptocurrencies as the collateral you need to fund all of your positions. This is way more risky because essentially what you're doing is funding your positions with a crypto that could very easily change in value, down 20%, down 30%. And so the amount of collateral that you actually have on account obviously can change a lot if you're using a cryptocurrency to fund your bets. Also, if you're going long Bitcoin, for example, and you have Bitcoin as your collateral, then obviously if the price comes down, not only is your collateral reducing in value, but your position is also coming down. It's like double trouble. So most people therefore use a stable coin to fund their bets. Inverse futures, these actually have an expiry date on them. So you can go and trade these if you like and actually trade towards an expiry date, but we're just going to stick with USDT perpetual right here and then just stick on Bitcoin. So what we have now is the Bitcoin market, most popular market, right? So US dollar tether against Bitcoin. We're using US dollar tether to actually fund our bets. And then we can go long or short on this currency pair. One massive difference trading futures and trading leverage as opposed to just buying and holding spot settled cryptocurrencies is that, like I said, it's a contract, and so you never receive the actual currency that you're trading. This is just a synthetic contract where you exchange the difference between when you open and close your positions. Because of the way that futures are actually created, and obviously they get their prices from the spot market, they have this thing called a funding rate, which the spot market doesn't have. When you open a position long, you have to pay money to have that long, because what you're doing is essentially putting money on account as collateral, and then what you're doing is basically borrowing money to actually leverage up your bets. So you can have leverage. Let's say you have $100 on account and you have 10x leverage. You can open positions worth $1,000, right? Because 10 times 100. When you do that, of course, you're borrowing money from the broker or from the short. So if you're going long, you'll trade against someone who's going short, you actually pay them money. So you're paying this funding rate. So this is really important to know, that when you go long, you're paying a funding rate. You can see the funding rate is 0.01, and it actually refreshes every 8 hours. What that means is that longs pay shorts every 8 hours, and they pay 0.01% of the amount that they're going long and the money that they're borrowing. If you go short, you actually receive this funding. So this is an extra bonus. If you go short, longs are going to be paying you 0.01% every 8 hours. 0.01% every 8 hours comes out at a daily amount of 0.03. If you annualize that, that's an 11% APY that you're paying to go long, right? So this is the moment, and this can change. But essentially, you're paying 10% as an interest rate to borrow money to go long Bitcoin in this case, or you'll be receiving that if you go short. So really important to know that the funding rate is there, and you'll be paying it if you're going long. So you have to put that into your calculations when trading. The next thing you're going to want to do is set your leverage ratios. This is really important to make sure you don't get wrecked if something happens, and you can do this yourself. Now, every futures trading screen and every futures provider will have different amounts, but what we really want to do is choose how much leverage. So what we can see here, I just clicked on this up here, long or short, it's actually the same. So it's going to pretty much give you the same screen, but you can set your leverage ratio. So how much leverage do you want to be using here? So 10 times leverage, it's quite a lot. You can actually get up to 100 times leverage if you go through some extra steps with Bybit. That is a ton of leverage. You're going to get absolutely wrecked if the market even moves a little bit. So when you use leverage, all of your positions are multiplied, right? So you make way more when the price goes up, and you can get wrecked way quicker when the price comes down. So how much leverage do you want to use? 10 is probably the max, I would say. Everyone is their own person. You can use as much or as little as you want, but you can obviously set this right here. So I'm just going to do 2 times leverage like this, and I'm going to confirm this. So what you can see up in the top now is that that's changed to 2x leverage. Obviously, the more leverage you use, the more risky things are, because essentially you're borrowing way more money, and your positions are just obviously exploded, way more if you're using way more leverage. The next thing you want to do is sort out your margin in terms of funding your positions. There's 2 things you can do. You can go cross, or you can go isolated margin. So cross margin, and we'll click it here. Cross margin, and you can come and read this, I'm sure it tells you. Cross margin is when essentially all of the positions that you have. So let's say you have a long in Bitcoin, you have a long in Ethereum, and you have a long in ADA. That's 3 different positions. They're all going to be up and down in different amounts. Do you want the money on your account to fund all of your positions at once? So let's say you have $10,000 on account and you've got 3 open positions. That $10,000 will be funding all of those positions at the same time, and they'll be drawing down on your margin, or you'll be making money. That's cross. Or you can isolate your margin, and this means that you have to essentially put margin on account for each position individually. This is a good way to mitigate any risk from one of your positions blowing up, so that your whole account doesn't blow up. So if you isolate margin, you can put let's say you have 10,000, you can put 3,333 for each position, and then if one of them blows up, your other positions are still there. So I would suggest using isolated. Of course, you can choose whatever you want, but isolated margin, 2 times leverage. We just press confirm right there, and we've just taken a ton of risk off the table. Before we get into actually placing some orders and seeing how that works on Bybit, I'm just going to go through a very quick strategy, like literally the first type of strategy that I'd use when trading futures, just to try and get some levels when we're trading, and try and kind of put ourselves in a good position to have some good kind of risk reward ratios. So if you are brand new to charts, then I've got a ton of videos that go specifically through all charts, how to use them and everything like that. But very quickly, if I was just coming to this for the first time, the first thing I would do is come over and draw some trend lines. I'm going to draw a trend line right here. Let's give it yellow. And I can definitely see an area of support right here. So I'm going to click this and we're around here, around 47. So I can see that kind of around here. So this doesn't match up. And you can see here, it is touching these candles right here. So do I want to bring it up a little bit? I'm kind of okay with it down because this is the latest price, the latest support level. You can see that. And when I think of support levels, I don't think of a line. I don't think of a specific price. I think of an area. Okay? In the real world, these things don't trade to lines, but they trade to areas. So, we have to kind of take this into account. Now, what you can see to the upside as well. So, where would I go to the upside? Just kind of a level here to see where potential resistance may come in. So I'm going to do the same again. I'm definitely obviously seeing this as an area of resistance right here. So just very quickly draw a line right here and probably move it a little bit. So that is obviously the last resistance. And I can see there's kind of an area up here that would be resistance as well. But what we're seeing, and this is a weekend when I'm filming this, so obviously volatility is coming way down as less people trade. And we're right in the middle of essentially the current range of a support level and a resistance level, the two most extreme prices. So that's the first thing I would do, just to get kind of some levels that we can see. All right, when I'm entering a trade, these are the levels that I'm seeing, the support and the resistance. If you're day trading with futures as well, another very simple method to kind of see some levels is the moving average strategy. So put 3 different moving averages on there. The way you can do that is come over to indicators, and we might want to put a moving average in here. So we'll put an exponential in there. So I'm going to do this 3 times, and you can see those come up on the left-hand side. So what you can see, got 3 moving averages. And what I want to do is go 5, 8, 12, 5, 8, 13, sorry. So I'm just going to change these settings. I'm going to go 5 period moving average. Now I'm using the 1 hour chart. So each candlestick is 1 hour in length. So a 5 period moving average is obviously 5 hours, right? So we're going to go okay on that one. And then this one, we're going to change this down to 8. Keep that the same style. And then this one, we've got 13. Okay, so that's 5, 8, 13 trading strategy. What is this telling us? We've got a very, very short moving average and a slightly longer moving average, and then 13 is the longest moving average. What this is telling us is the shorter moving average, so the 5 moving average, is showing us is going to track the current price much more. And then as you get longer, further out in your moving averages, that will be more smoothed out and track the longer price trends. What it's telling us is, where is the trade now compared to where it was in the past? And it will tell us basically what the trend is right now and see if we can actually use that to go ahead and trade. So what we can see is that the dark blue is actually the 5 period moving average, and you can see that down here just about. So when the price sells off, what you'll look for is maybe the 5 period moving average moving from below up through the other 2 moving averages. And what that tells me is that the short-term price action is actually a little bit bullish, and it's kind of moving through and breaking out. That tells me that there may be some buyers in the market that are kind of trying to buy up, and that we can try and ride their orders upwards. Okay, so you can definitely try this out and see this. But obviously look at longer trends as well. So I think we are kind of in a little bit of a downtrend right here. We've got some support right here. So, to tell you the truth, I probably wouldn't trade this exact chart. It just seems to be right in the middle of a range, which is, very, very difficult to trade. But there are really 2 ways that you can use very, very simple kind of technical analysis, moving averages and support and resistance levels to try and get into some positions. When you're looking to get into a position, you're going to have to do a lot of risk management. So the first thing that you'll want to do is use an order calculator. Bybit have one, and it will tell you everything you need to know about stop losses, positions, and everything like that. This one's actually really good. So let's go through it. So let's say we're using 2x leverage, like you saw me put in. You know, how much do you want to trade? This is up to you. So what this is going to do is basically tell you where levels are. You know, if the trade goes against you, when you're going to get stopped out. So 48,300. Let's say that's the current price, and then the close price. Let's say 50,000, right? So we're in the profit. If your initial margin, you can see the quantity we're trading is 0.00002, which I think is about $200 worth as a position. You only have to put $50 on because I'm margining up, right? So I only have to put on $50 worth of USDT, and I've got a position that's more than that, right? So the quantity of Bitcoin I'm trading is 0.002. If I enter at 48,300 and close at 50,000, how much will I make? You can see my profit here, my profit and loss percentage, and ROI. If you go target price, what you can do is like a percentage ROI, right? So let's say percentage ROI is like 20% or something. It will tell me where the price has to get to if I want to make 20% on my trade. That target price is 53,000. So if I say, right, I want to enter a trade now, I want to make 20%, it's going to tell you what target price to actually set your sell order at. If you're going long, you can change that for long and short. Liquidation price, again, it's going to tell you essentially, you know, if the trade really moves against you, and let's say you enter at 48,300, at what price are you going to get liquidated? So when you trade on leverage, obviously you can't just open positions. At some point, if you're losing too much money, the system's basically just going to shut all your positions, close you out at a loss, and take all your money out your account, so that you can't obviously have a debt. And that will be the liquidation price, a loss of 24115, right? And then the entry price right here. You can do this, right? So you can actually go long, put in your entry price, field quantity, average entry price. So essentially, you can work out, like, if I have some entries, put some limit orders in, let's say I put 3 limit orders in at certain prices and I get filled on them, what would be my average entry price for that? Not that useful, that one, but profit and loss certainly is. So that's how to use the order entry calculator to really get in your mind some of the risk that you're taking and some of the levels that you may need to put your stop losses and take profits at. We're going to go and enter some orders then. So we're going to enter into either a long or a short trade. And then I'll show you how to put a take profit and a stop loss, and also kind of some ways to know where you should put those. So we're going to go over to the screen right here. And I assume you know what market and limit orders are if you're trading futures. So obviously a market order is where you just enter trades and amounts, and you don't choose the price that you pay. And a limit order is where you have full control and you put in the price that you want to trade at, and the amount that you want to trade. Futures are a little bit different. Like I said, we're trading on leverage, and we only have to put in a small amount of the funds to fund the trade that we're doing. So this is a terrible time to put an order in. You can see that the price right here is right smack bang in the middle of this range. And so it's just somewhere where I wouldn't really trade. I would like to see the price, if I was going long, maybe come down here and then maybe starting to bounce off. That would be a good way to kind of hopefully try and ride momentum up into the mid price or up near here. So terrible time to put an order in. Order price. So you can choose this. Obviously, you're going to have to choose a price near where it's trading. So let's put 48,185. So we can click on that. And then how much do you want to trade? You can come down and actually trade the amount of, funds that you have on account. So let's do 10% or 25%. You can see that. So the order value right here, you can see is about $96. So you can change that any way that you want. Let's do 0.001. So that would be order value $48. You can see that you can open long and open short right here. So we're going to have a limit order, and we want the limit order to obviously be hit at 48,185. We're now below the price, you can see. And then you can go through and open that long, and that limit order will be put in for you. So what we'll do is just put a crazy price like 45,000 right here. And obviously you can put this limit order in. So we can come down here and just say open long like this. And it will show us obviously everything here. So 45,000 is the price we want to get in at. we're going to trade 0.001 Bitcoin. The order cost is here, the order value is here, and everything like that, and it's isolated margin. So you can click this off if you want to trade quickly. Just click this off. I'm going to click confirm like this, and that limit order should be put in for us. So what you can see is an active trade right here. It hasn't traded yet because our price is way below the current price. Our order price is 45,000. You can see we're miles away from that. So that is essentially a working order for us, and you can say field 0, right? So you can have this here and have these working. The way that you cancel this order, just come over, press cancel, and that limit order is no longer there. So that's what a working order would look like. Now what we want to do is actually enter an order with a take profit and stop loss. I do suggest that if you're trading on leverage, because it's just going to mitigate some of your risk. So exactly the same parameters, and we're going to go through. So let's say we have an order price of 45,000. We want to trade this much. Now, if you're going long, you can press this button here, buy long with TPSL. TP is take profit, stop loss is SL is stop loss. How would you determine where you want those to be? Well, if I'm going long right here at 48.2, right in the middle of the range, like I said, very quickly just putting some levels on, I would say a stop loss would be around 47,000. I'd put that at around 47,000, right? So we're at the bottom of the range. And to be honest, I'd probably just come down a little bit more to give yourself a little bit of breathing room. You can actually see that there's some wicks down here that bring it even lower. So it depends where you want to take the risk. Yeah, but I'd say, let's say 800. So that would be your stop loss, right? So if you go long right here at around 48, when do you want your stop loss to come in, right? So that would be that. If the price falls down here, maybe you've made the wrong trade or it's falling down. So you stop any losses, trade out at a loss. But you can put that in right when you're trading. The next one is the take profit. And again, I would say, level up here, kind of around 49.5. So that would be your take profit. So that is how you would enter an order with both the take profit and the stop loss. Now, that's sometimes called a bracket order as well. You basically go in and then you have your profit and loss set for you, and that will work on the system so that you've actually entered 3 orders here to go through, and that would just be working for you each time. So you can put that on. You can say, yep, I like these levels. If it moves against me, I'm going to sell out at a loss, and if it moves in my favor, the system will automatically trade out for me. One thing really important with futures as well is closing your positions. So like I said, with futures, you're trading a contract and your position is open the whole time. And it's not like the spot market when you just buy and hold stuff, and that's great. If you're going long, like I said, you're always paying those futures trading fees, the funding fees. And so you may need to reduce your position or close your position. The way that you do that is not actually shorting, but you can see there's open and close right here. So when you open, you can either open a long or you can open a short, and you can actually have 2 different positions, a long and a short, open together if you want. But how do you actually reduce a position? Like let's say you're long a Bitcoin and you actually don't want to be long a Bitcoin. You only want to be long half a Bitcoin now. So you want to take half out. You close your position. So right, you can see here, let's say, for example, I'm long 1 Bitcoin and I want to reduce that position. I can very easily just put 0.05 and then close long. If you're long 1 Bitcoin and you tell the system to close half a Bitcoin long, you'll be left with half a Bitcoin. So that's how that works. You can close your position, you can reduce your position, or you can close the whole thing dependent on how much you have. And then if you're going short, you've got a short position, you can close your short right here. Choose how much you want to close, and that's how you do it. So it's a little bit different with the futures market compared to the spot market. That will get you up and running trading futures and using leverage on Bybit though. If you want to get started, just click the link in the description and go through. You can sign up without any KYC, just with an email address for now anyway. Also check other helpful videos in the description. If you need them, there'll be a lot down there, and check some playlists on the channel for trading and how to trade as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.